Don Luskin, I go to you first. I'm reading your notes, and you're saying it's all about Europe. And with the greatest respect, it is not all about Europe. It may be about Europe for 20 minutes at a time, or even a day. But really, it's because America's economy, while not that strong, is outperforming, and it's about profits. What's your take?
Okay, fair enough. Fair enough. All I mean when I say it's all about Europe, I'm talking about that same 20 minutes you're talking about. That's the 20 minutes that's going to kill you if Europe really blows up. But let me try to, we don't have to choose, is it the U.S., is it Europe? I think it's all of the above, and here's why I say that. The situation in Europe has improved so much just in the last week because Papandreou's out, so no more GPAP pandemonium. Berlusconi's out, no more bunga bunga parties. Now, here's where it connects to America. You want a bull market here? Get Obama out. Stocks will be at new highs before you can snap your fingers.
Well, I don't know. Somebody once coined a term. It's called one step at a time. But I just want to say, Steve Weiss, I really do subscribe to this view. Guys like me 2-3 months ago were a little too pessimistic about the economy when the jobs data came in at 0 and retail sales at 0. After the revisions, things look better. We're growing about 2.5%. Import price inflation came down this week. Jobless claims under 400,000 for the first time in a long while. And the key point is profits. Profits are everything. And I think investors should focus on profits and not Italian politics.
I agree, Larry.
You do?
I do.
That's awesome.
And I'm an America First guy, too.
Don't address me. Yell at Luskin.
Well, I am going to yell at Luskin because he's the one I want to disagree with. 20 minutes in a trading day of 6.5 hours just doesn't matter. And what's also different about it is that the bar keeps getting moved lower in terms of expectations. If you said a year ago we're going to still be over 6% on Italian bonds, the market would have collapsed. But here we are, comfortable that it came below 7. So expectations somewhat different. U.S. economy, I was in the double dip camp. I'm no longer in the double dip camp. I have to agree with Don on one thing. If we had a different administration, man, it would be off to the races. But I don't know why.
Don't let me get in the way of that argument. No. I'm just saying, in the short run, I'm betting on the economy not going into recession. If my bet is incorrect, Don Luskin, then I will probably be wrong about the stock market. But I'm just saying, think of it from the standpoint of the average investor who's not a day trader and not in and out, not in and out, not in and out. I think you have to look back, and if you have any confidence at all in our economy and our economic future, and that would include possible political regime change a year from now, you really want to be in American stocks. And in fact, Don, I want to make the second case. America's gains, Europe's losses. Or let me put it to you differently. Europe's problems, which look to be totally long-term, I don't care what happens to Italy on Monday, are America's gains. This is the best place to invest.
Well, there's no question about it. Not only is America situated brilliantly in terms of all its global competitors, but there's this golden opportunity just laying there on the table. Given that fantastic situation that America has, why is it that American stocks are generationally cheap? Based on my valuation model, you have to practically go back to the year I was born in 1954 to find stocks as cheap as they are today. So you've got just absolutely this golden combination of opportunities. You've got unbounded upside, and you've got cheap stocks. You don't normally see those two things together. What's not to love?
I don't think the market's as cheap as some people think it is, probably including you, Don, because we're in a low-growth environment, so multiples should be lower. Having said that, the only thing that keeps this market from really moving higher is the volatility. If I were a European, where would I want to put my money? I'd put it in U.S. stocks.
Well, I also think, let me add one thing. Volatility is a great word. I know it's an important analytic word. I know it's an important CNBC word. But our economic future is not as bright as we would like it to be. But I'm just saying, in relation to what? In comparison to what? Those guys across the pond are getting the story wrong, maybe with the exception of Germany. They have socialism, they have entitlement states, they have welfare states, they retire at 45. Their story is even worse. Their bureaucratic story is even worse than our
much worse. And it's 17 different bureaucratic stories in the euro.
And my point is, our free enterprise is vastly better than their free enterprise. And since capitalism is the best path to prosperity, I say stay right here in the U.S.
I agree 1,000%.
But Larry,
it goes deeper here as well into our market.
Should flow here.
Absolutely.
Including Don Luskin. Dick Beauvais has completely convinced me that U.S. banks are so much better shape. I know they've had a rough time, but they're better than the European banks. Beauvais says the U.S. banks are so totally cheap they should be bought. And if our bank stocks go up, Don, the rest of the stock market's going to go up.
Well, all that has to happen for bank stocks is for them not to go down, because the real competition for U.S. stocks isn't German stocks, French stocks, Italian stocks, or Greek stocks. It's U.S. Treasury bonds. Now, what kind of competition are U.S. Treasury bonds given anything? Okay, those are locked in after inflation money losers.
And by the way, that's a great point.
That's why stocks are so cheap, because bond yields are so low.
I want to pile on to that point. Why would a smart investor put their hard-earned capital and invest in the U.S. government's bureaucracy? That's what you're doing.
They never was.
I hope people know that. When they go out and buy these goofy treasury bonds, they're investing in overpaid bureaucrats, departments that shouldn't exist, unbalanced budgets as far as the eye can see. It's nutty.
Right, and according to Rick Perry, it's either 2 or 3 departments that shouldn't exist. We just have to figure out what that third one is.
The guy had a senior moment. He had a senior moment.
We all do. But I would say you're right. I don't know, forgetting about the U.S. government in terms of how big a mess it is, bureaucracy, there is such a high risk to being in bonds now.
Right.
They don't have to move that much for you to take a huge, huge hit. If the yield backs up 25, 30 bips and you're just getting in there, that's a big hit to your principal.
Bill Gross actually bought almost at the lows. He was on this program. He bought when the bonds were about 160, 175. Today, I think they closed around 2. If the economic news continues to get better, I mean, Don Luskin's going to be right. Bond rates will go to 2.5, maybe 3. That means the price comes down and people lose their capital. Don, before I lose you, what's your favorite investment?
I really like gold again. I've kind of soft on gold for a while, but I love it again because you can just see that the Fed is totally missing this turn in the economy. They're still obsessed with double dips. And we've got the ECB, which under Italian Mario Draghi is finally loosening up. That is a great perfect storm for gold.
Steve Weiss, in a word, what's your favorite?
I love defensive stocks. I like Coke. I like Qualcomm. I like WellPoint.
All right, gentlemen, terrific stuff. Steve Weiss and Don Luskin.